Meet Jim. He's 30 years old and has $100,000 worth of student loan debt. He's just now managed to land a job that he'd like to make a career of, but he's spent most of his 20s scraping by on minimum wage and unpaid internships. He's a hard worker, but wage stagnation has prevented him from getting any kind of meaningful raise. And the cost of living in his home city is so high that the raises he's gotten haven't made much of a difference when it comes to planning his finances. Now, he finally has the funds to start thinking seriously about his retirement, but he still doesn't have much to put away every month. Does this sound familiar? If you have anything in common with Jim, you're hardly alone. For many people, the stressors of steep bills, scant job prospects, and an unstable economy make saving for retirement seem like more of a dream than a necessity. Most people don't even start thinking about retirement until well into their 30s, and even then, they typically think about retirement in terms of saving or putting away money rather than investing it. Twiddale, 2019. Let's return to Jim. Would it surprise you to learn that by the time he turns 65, he will have $750,000 in his retirement account? He could do this by finding himself a really good job or landing himself a big promotion. He could win the lottery or inherit from a wealthy relative. Twiddale, 2019. These are all ways to accrue a great deal of wealth, but Jim's strategy is easier and more reliable. All he's going to do is put $1,000 into an investment account every month from age 30 to age 40. Once there, it will continue to accrue at a rate of 7% until he's 65 years old. Jim is going to save $120,000 over 10 years, but that's going to turn into $750,000 through the power of compound interest. Staff, 2019. You too could be like Jim. Better still, you could be like Joe, who started saving 10 years earlier than Jim at age 20. By the time Joe is 40 years old, he too will have saved $120,000. But because he started saving earlier, he only had to put away $500 a month instead of $1,000. And because he chose to invest that money, he's going to have $1.5 million in his retirement account by the time he's 65. The secret to financial security is not money, it's time. With this book in hand, you'll be able to use all the time you have to convert years of savings into hundreds of thousands of dollars in returns.